I'm still super focused on the time horizon of right now is where I think the business cycle sweet spot lies, which is growth recovers, inflation remains low, and it starts supercharging my secular themes, which are technology and crypto. Both benefit from debasement of currency, the added liquidity, but in addition, there is this exponential age of technology that's playing out, and the adoption effects of that, of which probably AI is the fastest, but it may not be. Who knows what else is coming? There's a lot coming. The robots are coming fast as well. We've got lots going on there. And then crypto, which is actually part of the same thesis, has been on fire as we've got, the ETF flows driving things. But really what that all about is adoption. So we've got new technology adoption, which has been growing in a secular trend. And then it gets exponential every time you add the business cycle to it. So I'm really, really hyper-focused on that. If I look at, and just to tie in something Angus has looked at as well, I've gone through kind of every market versus debasement, this dividing things by the Fed balance sheet. I think Jordi and Angus, I've shown you this before. You divide it by the Fed balance sheet. There's only one emerging market that actually comes out to be growing, which is, again, on the same basis of debt demographics and deflation as India. So you've got, a very limited emerging market set that's really working and a very limited set. But those three markets alone are giving you enormous returns. So I'm super focused on that.
Once again, crypto lovers, the video that we have for you today is very delightful as we explore the intelligent insights and predictions of Real Vision CEO Raoul Pal as he offers his future predictions regarding the state of cryptocurrency in 2024 in this exclusive update. But he doesn't stop there. He takes us on a fascinating tour through the complexities of currency depreciation and inflation, highlighting the critical role that technology and cryptocurrencies will play in overcoming these financial obstacles. Raoul Pal makes bold predictions about the future use of robotics and artificial intelligence in addition to current market trends. His ability to predict how these innovations would perform better than accepted norms is quite astounding. This movie is more than just a financial update. It's a look ahead to the future as seen by one of the most reputable people in the business. Therefore, Raoul Pal's views are sure to inspire and enlighten you, whether you're an experienced investor or you're just starting out in the world of cryptocurrencies. Without further ado, let's explore finances, technology, and the future in excellent detail with Raoul Pal.
So let's say you're right, is that people don't value businesses correctly anymore. And Jordi's right that let's say the business cycle is structurally shifted. That sounds like it's going to be an extremely positive backdrop for markets that most people don't understand. Last year was a typical market where nobody understood what had happened. But really what you're talking about here is kind of a change in how people approach markets and economies, and people haven't got to that understanding yet. So maybe that's one of the reasons the markets were so ludicrously strong last year. You just need the Fed to take its foot off the neck of the market, and before you know it, this kind of beach ball shoots out from underwater because things have changed. We grew up in a world where businesses were financed by debt, the General Electrics of this world, and all of these, they were debt-financed businesses, and interest matters. Basically, the entire leadership of the S&P 500 has never had a single debt in its life. Or if it does, it's just for cash flow management purposes. And they're all equity driven. Everything is equity driven now. If you think of, all of the VC business, that used to be your local bank. You'd have to beg and say, I'm setting up a new business. Now we call it a startup, and a startup actually means equity funded thing. And therefore, maybe the business cycle matters less. Angus, what are you seeing? Because a lot of the tech companies, stuff like that, there is a difference between people who borrow money and people who don't.
ETF inflows into Bitcoin are increasing dramatically, and they already amount a significant $233 million. This increase suggests that investor interest in Bitcoin ETFs has significantly increased, as seen by the steady stream of funds into these funds. It is notable that this increase has happened in spite of the cryptocurrency market's well-known volatility. In spite of this inherent uncertainty, Bitcoin has proven resilient, regularly hovering around $51,000 as a very constant price level. Notably, the world's largest asset management company, BlackRock, took a risk by investing a hefty $168 million in Bitcoin exchange-traded funds, ETFs. In addition to confirming the rising institutional interest in Bitcoin, this major investment from BlackRock also highlights the wider recognition of its potential as a store of wealth and inflation hedge. There is yet more participation from powerful individuals. Leading investing company Fidelity has demonstrated its resolute belief in Bitcoin's long-term prospects by contributing an astounding $53 million to inflows into Bitcoin ETFs. As a testament to institutional investors' acceptance of cryptocurrencies, Fidelity's aggressive involvement in the Bitcoin ETF market confirms the industry's legitimacy as an asset class. Let's hear what Raoul Pal has to say next.
I also think businesses will rise and fall much faster. Like, I was using recently Otter AI to do, when you're on a Zoom call, it transcribes it, gives you some notes. Zoom, we started using the Zoom one, it's like 10x better. That's the end of Otter. And we're seeing this happen at a scale because people are now using AI to build the AI, to build the business, to build the AI. And it's like hyper fast. I'm worried that venture capital will never be able to capture money in this environment. Sure, in some areas, of course, but in some of the really fast moving areas, we've seen it in blockchain. It's been really hard. An ICO market seems to be more effective because it can trade for 6 months and be worth a lot or nothing. And it's okay. But I'm not sure the VC survives this. Do the hardware? I'm reading a random book that both of you probably enjoy, and you wouldn't think you would, is Yanis Varoufakis, the kind of Marxist intellectual economist.
Greece.
He's got a book called Techn, feudalism, and it's bloody interesting because his view is these platforms like Amazon, Twitter, Apple, all of these, they are now a feudal-based system. They're not capitalist because it's all rent taking. So you're a rent taker at the middle of the system. And if you want to operate in that world, the feudal landlord takes his fees. And I think it's the same in tech hardware. That's where it's going, is like, there's literally the barriers to entry are so high, it's almost impossible. Of which Taiwan as a country has a barrier to entry so high, it's almost impossible to deal with, that they become feudal landlords of the hardware. It becomes very interesting, and maybe the serfs in the bazaar trading things are all of the software companies in the end, when it used to be a software-owned world. There's something shifting here, and I don't know what it is.
Citing the quick rise and fall of businesses, Raoul Pal forecasts a fast shift of the corporate landscape. He emphasizes how corporate procedures may be accelerated by using AI, like Otter AI. Pal doubts that traditional venture capital can keep up with this fast-paced world, especially in fields like blockchain. He contrasts the agility of initial coin offerings, ICOs, with the challenges faced by venture capital. Drawing from Yanis Varoufakis' techno-feudalism, Pal likens major tech platforms to modern feudal entities. He extends this analogy to the tech hardware industry, envisioning high entry barriers resembling feudal lords. In this scenario, Pal speculates that software companies may become serfs, navigating within the constraints set by hardware landlords. Overall, he observes a transformative shift in the tech industry, acknowledging uncertainty about its specifics. Don't forget to like and subscribe for daily videos like this. Until next time, happy investing.